Veronica Gallo-Alvarez, you are head of Core Europe Fund at Aberdeen. Thank you for joining us on BiTV.
Thank you.
Because of inflation and rising interest rates, there's a lot of uncertainty on the real estate investment market at the moment. As the head of Core Europe Funds at Aberdeen, which is an institutional investor with a pan-European scope, how do you navigate this current economic context?
The inflation and rising interest rates is producing a lot of uncertainty in the real estate investment markets. And it's true that the spread between government yields and property yields is decreasing. So that means effectively that we are going to see, a market correction that is going to happen more and more. Also, we are also seeing that in the next months, the inflation is going to produce also certain risk associated with the tenants, with the risk of paying income, and also there's going to be a less potential of rental growth. So all of that is going to be reflected in yields that are already starting to move, and of course we are going to see that going, these yields sheets increasing over the next few months. So the question we're asking ourselves, what do we need to do at the moment? And in this context, what we are going, we're asking all our fund managers is to review our portfolios, effectively to see where we can identify any risk, because the focus today is to protect what we have, to protect our track record, to protect income, and protect value wherever it's possible. So how we are trying to, the idea or the purpose is try to reduce the risk whenever we can. So that means effectively either reducing leverage if needed. We are going also trying to reduce the risk associated with income, with the ability to collect income from tenants. We are asking fund managers to increase our cash, the cash positions of our funds to be able to face any uncertainty, any external shock that could have an impact on the portfolios. And so that's why, for example, active asset management is becoming a focus in the next will become a focus over the next few months, because effectively the idea is to extend income, to regear leases, to let voids where we can, so effectively to secure the portfolios and to protect values, tenants, and income.
Okay, and it's interesting. It's interesting that you mentioned asset management, because at the same time we talk a lot about inflation, interest rates, but investors also face many challenges independent of the economy, notably on ESG. As Aberdeen aims to reduce its carbon intensity, the carbon intensity of its assets, by 50% by 2030. How do you reconcile these ambitions with this complicated market environment?
Yeah, independently of the economic environment where we are today, from our point of view, ESG continue to be a main focus for Aberdeen and for Aberdeen funds. We believe that once the market will recover, ESG is going to be fundamental in how is one of the variables and fundamental variables how to analyze investments. So in the long term, we believe the market is going to differentiate and polarize between what we call ESG assets and non-ESG assets. So basically assets with a strong ESG credentials versus others that they don't have any. We also believe that in the current circumstances and the current environment, with high energy prices and tenants having to face higher energy prices and utility bills, this is going to become more and more important. So efficiency on consumption of energy is going to be absolutely fundamental in the way we run our buildings, and it's going to be something that asks for our tenants, and it has to become a main focus. So independently of what's going on currently in the market, that's still a focus. So how we balance both, in the short term, this, let's say, economic environment in the long term these ESG obligations. We continue now, we started already a number, to review our portfolios to understand where they are sitting from an ESG point of view. And most recently, we started to work in non-zero carbon paths for our portfolios. This work has not stopped despite the economic environment we are living at. Even I think is even becoming more important. So we continue to undertake those reviews, and the exercise will continue across all portfolios. Because the intention is to put in place strategies at asset level, at portfolio level. We are undertaking feasibility studies to understand what we need to do to make improvements in the buildings. Also, we are considering, we are looking at how we implement ESG from the beginning, not the existing portfolios, from the moment we start looking at transactions. For example, in our due diligence process, in our bidding process. So effectively, no matter what's going on in the medium term, in the short term, the current conditions have not changed anything in terms of our long-term objectives from an ESG point of view.
Okay, and a lot of challenges ahead, obviously. Given this transforming market environment, do you plan to adapt your investment strategy, whether in terms of location, targeted asset classes, maybe volumes invested?
I think we need to differentiate in terms of the investment strategy. We need to differentiate between the short term and the medium term. Clearly, in the short term, we are starting to see a market correction, and we continue, and we expect as a house abrdn that this market correction will continue over the next few months. And of course, that means that our investment activity in the short term is going to slow down, of course, because we need to observe what's going on in the market. So we are going to be probably more opportunistic, looking for the right product in the market, depending on how the whole market and market correction is happening. So that will be in the short term. But in terms of the long term, probably the fundamentals that have been driving our investment activity over the last 2 or 3 months won't change. Why? Because we still believe that some of the structural drivers and structural fundamentals or changes we've seen over the last 2-3 years will continue after the market correction. So in practical terms means that we still believe that logistics in the long term is a sector where we want to be, simply because, again, the structural changes we saw during COVID, particularly with the change in consumers' behavior and the increase of e-commerce, will continue. It probably even increase. And also because we are seeing, some of the main drivers of the logistics activities, they're still there. So that will continue to be a focus. Of course, the residential sector and in general, all what we call living will continue to be our main focus, because we believe that even after the market correction, still is a sector that has a lot of growth potential for growth. It's true that in the short term, of course, there's a lot of talk in certain countries of setting caps of indexation and to regulate indexation, and that of course going to have an impact in the short term, but still we believe in the sector. And then probably the third theme that we already, before in the current, previous to this change in the market, we were still looking at in terms, particularly in offices, is ESG. So anything we do has to have a strong focus on ESG. And if we look at and we strongly believe, as I was saying earlier in your second question, is we strongly believe, for example, on offices, that there will be a polarization between, offices that meet the ESG credentials, particularly on consumption, energy consumption, and those not. And that, ESG buildings, ESG offices will be more resilient. But it's not only about ESG. It's also about what we call future fit offices, meaning offices that provide the services that tenants want in terms of amenities, in terms of proximity to public transportation, about different type of services like gyms, like restaurants, leisure, etc. So a space that allows for collaboration, and of course, an office building that meet all the technology requirements that we have, our tenants have today. So that will be probably the three pillars of our investment activity once the market recover, because those we believe that there's no reason for change those despite the conditions.
All right. Well, a lot on your plate and a lot of answers to the many questions that are facing. That's good to hear. In the meantime, thank you very much for your time, for this insight, and thank you all for joining us. And see you soon on BiTV.
Thank you. Have a good day.